Stocks struggle amid political and economic uncertainties. U.S. stocks slipped for the first time in 5 days on Tuesday as a stalemate in fiscal stimulus negotiations continued. JP Morgan and Citigroup reported quarterly results that beat expectations, but the data failed to impress investors. Equities faced pressure as Johnson & Johnson said it would pause its COVID-19 vaccine trial because of an unexpected illness in a participant. Following suit, Eli Lilly decided to pause its trial of a COVID-19 antibody treatment over safety concerns. As a result, the Dow Jones Industrial Average dropped 0.6%, the S&P 500 slid 0.6% to 3,511.93, and the Nasdaq Composite dipped 0.1%. Asian stocks were mostly lower on Wednesday after setbacks in the search for a COVID-19 vaccine or therapeutic drug and an impasse on U.S. stimulus negotiations, denting risk sentiment and causing uncertainty among investors. The MSCI Asia Pacific Index fell for the first time in 8 days. Elsewhere, the Bank of Korea left interest rates unchanged at 0.5% as expected, and Singapore reported its economy shrank at a lower pace in the third quarter, down 7% compared to a 13.3% contraction in the second quarter. Japan's benchmark Nikkei index finished 0.1% higher. The S&P ASX index in Australia was down 0.2%. Hong Kong's index closed unchanged, and China's Shanghai Composite Index ended 0.5% lower, while South Korea's Kospi Index fell 0.9%. European stocks finished slightly lower on Wednesday as coronavirus concerns continue to weigh on global markets, with uncertainty over a Brexit trade deal also dampening the mood. The Pan-European Stock 600 index fell 0.1%, pulling back from earlier gains. London's FTSE 100 index fell 0.6%, its third straight day of declines amid growing domestic political worries about new business restrictions and Brexit developments. EU leaders will hold a summit in Brussels on Thursday and Friday to assess progress in talks. Also on the negative side, the International Monetary Fund revised its forecast for the economic growth this year. The global economy is now projected to contract by 4.4% in 2020. On the data front, fresh data showed that the European zone industrial production slowed sharply in August as expected, mainly due to a plunge in the output of capital goods. In the U.S., stocks fell for the second day in a row on Wednesday after comments from Treasury Secretary Steven Mnuchin. He said that getting a coronavirus stimulus done before the election would be difficult, adding that both sides were still far apart on certain issues despite Democrats and Republicans were making progress in some areas. As a result, the Dow Jones Industrial Average was down 0.6%, the S&P 500 closed 0.7% lower, and the Nasdaq Composite slid 0.8%. As for corporate earnings, Goldman Sachs reported much better than expected quarterly results, driven in large part by strong bond trading revenue. United Health reported better than expected earnings and revenue for the previous quarter as well. The Bank of America's earnings topped analyst expectations, but the bank's revenue missed the mark. Against this backdrop, its shares plunged over 5%. Wells Fargo stocks dipped 6% as the bank's third quarter expectations missed earnings. Elsewhere, the dollar came under pressure after failed bullish attempts. The US dollar-Japanese yen dipped back under the 20 DMA amid the resurgent safe haven yen demand. The USDJPY was rejected from the 20 DMA and has been under pressure since late September as traders remain cautious amid persisting global uncertainties. The Euro-USD finished unchanged on Wednesday and stayed flat on Thursday morning as the common currency lacked appeal despite dollar weakness. Oil prices rose for the second day in a row on Wednesday despite industry reports from the IEA and OPEC suggesting that oil demand growth could be weaker than anticipated. Brent crude climbed above the $43 handle and preserved gains after the American Petroleum Institute reported a major draw in crude oil inventories of 5.421 million barrels for the week ending October 9th versus a draw of 2.835 million barrels expected. The U.S. Energy Information Administration is due to release a weekly data report on Thursday, a day later than normal following a public holiday. Also on the positive side, 2 OPEC Plus sources said that the Organization of the Petroleum Exporting Countries and its allies had 100% compliance with the agreement to cut oil supply in September. Today in Asia, stocks lost more ground on Thursday as hopes of U.S. fiscal stimulus before the November 3rd election faded, while a record number of new coronavirus infections in parts of Europe propelled investors toward safe haven assets such as gold, which gained 1% on Wednesday, rebounding from a sharp decline in previous session, boosted by a weaker U.S. dollar and economic uncertainties. The MSCI's broadest index of Asia-Pacific shares outside Japan slipped 0.1%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.